Welcome to Tip TV Finance, where it's CEO interview time with Vincent Mascolo, who is CEO at IronRidge PLC. How are you today, Vincent?
Very good, thanks, Zach. Very good.
Right, I'm very pleased with your company because the shares actually went up when they were predicted to go up in the summer, but that's rather trivial compared to what you're actually doing on the ground. Tell us a bit about your company.
Originally, IronRidge was one company, one focus, being iron ore in Gabon. That wasn't working for us with the commodity prices for iron ore. So in February this year, we had a unanimous decision by the board to refocus and diversify the company into other commodities. And accordingly, we conducted 3 geo-African tours, and we identified several projects around the globe, but particularly focused in Africa. Our first deal was an amazing deal in Chad with the Tecton Minerals team. Not only did we take the projects, we took the team with it as well. So we're investing $3.5 million there in over 18 months in 5 great gold projects. We have one project there already called Dorothy. It's advanced, it has drill-ready targets, and we'll be looking to drill that early next year. In total, we have about 1,400 square kilometres and some phenomenal grades that we're uncovering. So that was deal number 1. And deal number 2, we went into Ghana and we identified some lithium opportunities adjacent to a known resource of about 1.5 million tonne at 1.66%. We did some joint ventures with the surrounding tenure holders, and we also did some applications in our own right. So we've secured that block, and we're in the final throes of completing due diligence there, which we think will be fruitful, and we'll be looking forward to developing that early next year as well. Then we migrated into, it's been a busy year. Then we migrated into the Ivory Coast, and we identified some fantastic lithium opportunities there as well. We got the geologists on the ground and we had a good look, and we did a joint venture, and then we also complemented that with several applications in our own right, which have been submitted and now pending approval. So while we were doing that, we seemed to get a lot of attention in the Ivory Coast, and we were approached by a number of gold prospectors. And just over a week ago, we announced a deal with 3 companies, which we sort of synchronised very well, and we secured 6 project areas all along major structural trends that's got the geologists salivating in our camp, which excites me very much. When they're excited, we all get excited as a management team, and we're just now starting to do due diligence there. And on top of that, it doesn't stop yet. We have our bauxite project in Australia, which was with the company from when we were admitted to AIM in 2015. 3 or 4 months ago now, we announced a maiden JORC resource of about 55 million tonnes. We have several pods surrounding that, but we have taken the strategy to understand the metallurgy properly, because we're not sure just yet whether it's going to be a bauxite play with titanium credits. When we go back a bit, there's a high percentage of titanium through that deposit, and so now we've got the hydrometallurgist just analysing that for us to see whether it's a titanium with bauxite or it's bauxite with titanium credits. So a lot going on. And then part of our top-down search and pull apart of our operations, we identified a beautiful little project called May Queen. There were some historical results dating back to the 1980s. Grades in 145 grams per tonne over a metre. The one that interested us the most was 38 grams per tonne gold over 4 metres, but the drilling stopped in mineralisation. We couldn't, during our evaluation of that, we actually couldn't, we created more questions than we did answers. And then the one question we had to ask ourselves, can we walk away from this project without actually having a bit of a scratch and a sniff ourselves? The answer was obviously no. So we embarked on a small drilling campaign a month and a half ago, nearly 2 months ago now. And fortunately, we hit gold. So 16 grams per tonne, 14 grams per tonne, 6 grams per tonne. So we've confirmed the historical data that's there, 35 years on. And now with the introduction of some more regional geophysical data, we've identified several blind areas that we're going to be looking at more closely in the coming months and early in the new year.
Well, you've actually tired me out with that description of all you've been doing this year, but the key this year has been the big turnaround in the mining sector after 5 years in the wilderness. You really have been active, I think January, February was a turnaround time. Iron ore has helped, I suppose, with Trump's promise to go for infrastructure. Gold remains, well, even though the price is tumbling at the moment, the physical demand is allegedly still very strong. What should be the focus as far as investors are concerned? What's the best thing out of all the things you're doing? What do you think is the investors should be focusing on in particular?
Well, probably all of them. I mean, from our perspective, iron ore is now a longer-term strategy. It's the commodity price has had a good spike recently. We still have a great relationship with the Gabonese government. That for us is still in care and maintenance at the moment. We would like to see the iron ore price stabilise over a longer period of time rather than just spike up and down. Gold, I mean, we've got a lot of gold assets now. Lithium, I don't think there's any one particular focus. I think we've diversified ourselves. And I guess the plan was, we suffered greatly from one company, one commodity. And now we've, I guess, for lack of a better word, we've immunised ourselves now, so we've got.
It's a bit diversified, but ironically, I mean, if you were just now given the turnaround in iron ore, it wouldn't have mattered if you were just one metal.
Well, the question is it going to stay there? We don't know. I don't have a crystal ball that gives me all the answers, but we're diversified now. So what we've done is we've gone from no options to now we have lots of options, and many permutations and combinations. We can do deals.
Right. And the other thing was lithium. I mean, for me, there's like a bubble in that a couple of years back. Mm-hmm. It's going to still take a while for that to come through. We've got all these predictions about electric cars and other things like that. But is that really going to be the big payer that people are expecting?
Look, we think so. We think so. While everyone's focusing on electric vehicles, Tesla and Powerwalls and urbanised regions around the globe, we're heavily focused on Africa. It's a dark continent. It's going to miss the stored energy space is going to allow Africa to progress rapidly without having to succumb to the great infrastructure costs that are required to get high voltage transmission lines from power stations and hydro stations and the like. It'll be very similar to the mobile phones. The technology caught up with them very quickly and they went straight to mobile phones, towers, and didn't really require the infrastructure costs associated to get people connected. So we think something similar will happen with the stored energy space, and lithium's going to be a part of that for the next 20 years. That's what we look
forward to. Vincent Mascolo, CEO at IronRidge, thank you very much for coming in today.
Fantastic, Zach. Thank you.